Over the past 70 years, the employment rate has been a perfect forecaster of a recession. More importantly, the unemployment rate appears to be edging closer to triggering a signal that a recession is on its way. So let's take a look. If you listen to the pundits, the unemployment rate hovers around 4%, which is the number reported in the mainstream media. But the more accurate unemployment rate is indicated to be about 8.1% as shown here. The 8.1% figure takes into account those who have given up finding work and those who are underemployed. Underemployed means workers who are part-time but want full-time employment. This more accurate unemployment number is called the U6. The less accurate number, as used by the mainstream media and the government, is the U3 figure. I'm sure you can figure out why they use the U3 figure and not the U6 figure. And this chart here is from Fred, the St. Louis Fed, and it is the actual figure for U6. And according to Joseph Livornia, who is the chief economist for Americas at Natixis, since 1948, the economy has always entered or been in a recession when the unemployment rate increased 50 basis points or 0.5 percentage points from its trailing cyclical low. Livornia added that a recession has occurred in 11 instances regardless of the level of unemployment. In an interview with CNBC, he pointed to the example of a recession in 1953 when the unemployment rate rose to just 3.1%, which is at the lower end of the scale, and in 1981 when the cyclical low in the unemployment rate was at 7.2%, toward the upper end of the range. Now, the U3 unemployment rate, which was reported in February 1st, rose to 4% in January from 3.9%. So it is currently 30 basis points above the low of 3.7% reported in November. And you can see that tick up in the unemployment rate even with the U6 figure up to the current 8.1% rate in this chart toward the lower right. So based on simple math, the unemployment rate is close to triggering a recession indicator. However, Livornia says the chances are still only 1 in 3 that a recession happens. And according to CNBC, the reason the unemployment rate has risen is actually a good thing. The long-term unemployed are returning to the workforce and looking for a job. But according to Livornia, generally, job growth is positive just before a recession. And this isn't the only indication that a recession is creeping up on the United States. Other signs are there if you choose to look past the glassy-eyed talking heads in the media. Retail sales were so bad in December of 2018 that many say it had to be suspect data and not the simple fact that the economy isn't as strong as many would have you believe. If the data was not suspect, then a recession is on the way. And with retail stores closing at a relatively alarming rate, it isn't surprising to hear retail sales have dropped. So, we may be on our way to a recession, but we're not there yet. We'll stay tuned. And you, please stay tuned to this channel. And so for today, that's ChewDog Charts. Thank you.